In the global arena, Kenya holds the distinction as one of the star economic performers of the world in the year 2015 after returning a growth rate of 5.6% last year. This is well above the global expansion rate of 3.1% and higher than the average GDP growth in sub-Saharan Africa of 3.8%. However, it was lower compared to the GDP growth in countries such as Tanzania at 6.9%, Rwanda at 6.5%, and Ethiopia at 10.2%. Central Bank Governor Dr. Patrick Njoroge says Kenya's economy could have expanded at a higher rate but was dragged by internal as well as external factors.
The outlook is relatively good. So, as you know, this is important for us because we have very strong connections with the region, and most of our exports, for instance, 40% of our exports goes to the COMESA region, and about 23% of our export goes to the East African community, to the rest of the East African community. So it is important to know, and it will impact us if indeed there was a strong, as we have seen now, that the outlook for the region is strong.
The central bank governor is of the opinion that this year the growth will be much better due to ongoing physical reforms and improving global prospects. He projects that the economy will grow by 6.2% this year. The growth is expected to be driven by the building and construction sector, infrastructure development, and private sector investment in residential and commercial properties. The agricultural sector is also expected to perform well, although lower rains in the year 2016 may reduce growth of the sector compared to 2015. Innovations in ICT are expected to continue to spur growth in financial services sector. The central bank governor says the macroeconomic indicators are expected to remain stable in the year 2016 to support growth, with inflation expected to be contained within a single digit.
Even though the 5.6 is really in line with our expectation, what was a bit of a surprise was agriculture. Agriculture was much stronger than we were expecting. And in a sense, it's a good indicator because it shows that that GDP is private sector driven, as opposed to relying much more on public, let's say, infrastructure and things like that.
During its latest meeting, the Monetary Policy Committee lowered the benchmark interest rate from 11.5% to 10.5% in a move to spur credit to the private sector and manage inflation. But University of Nairobi economic lecturer Dr. XN Iraki says, though economic prospects look promising, a number of domestic and external factors could affect the projected performance of the economy.
I think we need to look at other methods of solving our political problem in this country. I know demonstrations are covered by a constitution that you can demonstrate, but I think when we keep on demonstrating like that, it might be too costly to the economy. So we need to get used to sitting with each other, dialoguing with each other, solving our problems, so that they don't become this big, so that we go throwing stones, shouting at each other. It might appear entertainment, but it's very costly to the economy.
Dr. Iraki says the recent series of protests against the electoral body that have turned violent may also impact negatively on investment and business climate in the country.
To disrupt business in Nairobi, you are indirectly sabotaging the Kenyan economy. So what is happening every Monday will definitely be reflected in the Kenya's GDP or the Kenyan economy. It will be reflected in two ways: short run, in the long run. In the short run, people are going to lose immediate business. The restaurants are not going to sell, the supermarkets are not going to sell, the mama bogas are not going to sell their products, and they are going to feel the effect because for that day, they're not going to make money.
The looming national election is also likely to drag growth due to fear of violence. In the year 2015, the growth of the manufacturing sector was tempered by the high cost of credit and cheap imports. Since the fiscal year 2011-2012, tax collections have steadily grown from 733 billion shillings to a projected 1.3 trillion shillings in the current financial year. KRA should consider integrating the mobile platform to its tax payment systems to allow easier payment of taxes. According to budget policy statement tabled in Parliament by the Cabinet Secretary, the government plans to cap domestic borrowing by nearly a quarter to 168 billion shillings in favor of external financing, which will increase to 365 billion shillings from an earlier projection of 340.5 billion shillings. Experts are of the opinion that if Kenya sticks to this lane of fiscal reforms and improve business climate in the country, the economy will register better than normal economic growth in the short to medium term.